Welcome to Politically Speaking. I'm Bob Montgomery, filling in for Elizabeth Benyon. We have recently witnessed major banking failures, which have left a lot of people really quite worried about the safety and the security of their hard-earned money. We'll dive a little bit deeper as well to discuss some legislation that could change how your retirement money is invested. Is it a good thing or a bad thing? Joining us today to discuss these topics and more are the Indiana State Treasurer, Dan Elliott, and the President and CEO of First Source Bank, Andrea Short. Thank you both for being with us today. We appreciate your time. Mr. Treasurer, I will start with you. I want to ask you about the state of Indiana and how you think the underlying causes came up for the state, specifically with the banking issues that we have seen play out nationwide. Now, the state of Indiana hasn't seen a direct impact on this, or have we seen a direct impact on some of the banking failures?
Well, I will say this. Directly, we haven't seen issues hit our local banks, mainly because our banks had a very diversified program. They were able to work efficiently, work and focus on helping businesses, helping depositors. The bank, and when we look at SVB, we look at Signatory Bank, they were very specific in certain industries. They did not have good liquidity, and because of that, they really had difficulties when we had difficult financial times. Where we do have some issues in Indiana had been with some of our tech companies that were receiving venture capital. Those venture capital companies had relationships with SVB, and then what happened is that they had some difficulties worrying about their own situation, but that was quickly resolved. And so with that, I would say, frankly, Indiana was the impact was minimal on the state of Indiana.
The state of Indiana have to take any actions to try to help out in the scenario with some of these locally tied companies and or financial institutions? And if so, what were those actions that were taken?
We did not, because those were private firms, so there was no need for that. FDIC handled that. That was happened on the federal level. So we didn't really have any impact there for our state, and we had nothing that we had to do on our state as a course of action.
Ms. Short, when it comes to a banking failure, that's probably the worst case scenario for a banker like yourself. What were some of the lessons that you learned, and what do you see as the systemic problem, or was there a systemic problem that caused SVB to go down?
Yeah, I think that a big part of what happened here was the management of the risk and the risk that SVB had, both in their concentrations in the deposits they had, and then when we had this, they had a large influx of deposit, which a lot of banks did, most banks did actually, with all the stimulus money that came in through the pandemic. And so they had that large influx of deposits. They didn't have as many loans, so they took that money that they got as deposits and they invested it in very long-term investments that weren't liquid. And then when we had this unprecedented, or at least in recent history, unprecedented rate increase in 2022, those investments became not worth as much as what they had paid for them, right? Their market value was under the book value, and they had to take a significant loss to free up that liquidity. I think that's different than how a lot of our banks are, banks in the state of Indiana, and more specifically in our community here in Michiana. We tend not to have that large deposit concentration, and we also tend to be, we're Midwest banks, right? I'm born and raised in the Midwest. We're Midwest, we tend to have Midwest values, tend to be a little more conservative. We try to manage our risk a little more closely. And so we are trying to balance the maturities on our assets and our liabilities so that we don't have that mismatch.
I'm going to ask you a bit of a history question and compared to today. And of course, everyone is familiar, most people are familiar with what happened in the Great Depression and the banking system collapse back then, and the factors that were at play there versus the factors what we see in these isolated incidents here. Is there any comparing, contrasting, or is it completely an apples and oranges scenario?
Well, I'd say it's a lot of much more different factors. There's a lot of things that impact banks today that didn't impact banks back then. One thing that happened at SVB was they really had the run on the bank, and the run on the bank could be so much more quickly accomplished because everybody transfers money electronically, and social media runs with ideas. There's no longer people coming in to coming into the bank, right, and coming into Jimmy Stewart, right, and saying, you can't take this because your money's invested in so and so's house. So some of that is very different, but I think also just the concentration in this venture capital and those unprecedented rate increases, and some mismanagement of interest rate risk and liquidity risk really caused what happened today.
Treasurer Elliott, do you have any concerns when you look around the financial landscape of the state of Indiana, and specifically some of the financial institutions, that maybe there should be some reason for concern from various institutions, whether it's a local bank or a more regional approach?
Honestly, I don't, and here's why. One of the wonderful things about the state of Indiana, and I love that you brought in some history about the Great Depression. The state of Indiana has something called the Public Deposit Insurance Fund that all banks, not all banks that hold public deposits, participate in. This is a very unique fund, really unique to the state of Indiana. As was mentioned by Ms. Short earlier, we tend to have very pragmatic values here in the Midwest. And this fund was developed in 1937. It holds currently about $320 million, literally to help us in the case of a bank failure for when it comes to public deposits. That would be a municipal government, a county government, a county hospital, a school, the state itself. When we look at that, this goes back to good old-fashioned, I hate to say it, but good old-fashioned Hoosier values, where we say, look, we're going to learn from our lessons in the past, like what happened in 1937, or in the Great Depression. And in 1937, we created a program, and to think that today, this is still a valid fund that is growing, that we're able to use to protect depositors. What's also amazing is I literally that Monday, I met with bankers I met in a banking committee with treasurers from all over the country, and they were astounded that we had something like that. We are the only state that does that.
Beyond this fund, is there anything regulatory that you would like to see to perhaps shore up even further the banking system and the financials of really the financial wherewithal of all the people of the state of Indiana?
I don't think the regulations are really the answer here. If we look at what happened in California, one of the big questions that was brought up is what was going on with the federal regulators there? Why were they not seeing some of these issues? Because they weren't something that you couldn't see. So I think really what is required that we just make sure that the regulations that we do have, that we're following them. I think that is really probably our better answer. Not more laws, not more regulations. Be very focused on those that we do have.
Ms. Short, you mentioned a few moments ago about the social media aspect and how the word spreads so much quicker these days. So many people do their banking on their phone right now. Is that a help or a hindrance?
Well, overall, I think it's a help. I mean, the thing you have to make sure what you're doing is everybody right now is very reactionary, and we react very quickly to what we see on social media, whatever it may be. And so I think that it's not just, and it's any type of media, what you see out there. So, banks are going to start releasing earnings in the next week, and the next, it's big earnings season starts maybe 2 weeks from now, where we'll see banks all across the country, and small banks here in the Midwest will all be releasing earnings. And I think everybody's just so reactionary. And so I think that you have to really make sure that you're making wise decisions and not just reacting to something that you see out there on social media.
And it appears as though it's the immediate reactionary, the ability to be immediately reactionary,
right. Yes.
versus the old days, the quote-unquote old days, when reactionary was, I'd need to call someone tomorrow morning or perhaps the next day. Right now, you can do it immediately.
Right. Well, people are transferring money on their phone all the time, right? And so I think that mobile banking and being able to do all of your business on your phone is a great thing. I do, and I think we see that our clients, that's what services they want. They want to be able to do that. But then you do have the risk where they can move that money much more carefully. So there's a lot of positives. There's a lot of negatives also with moving money fast. Fraud is rampant. All those types of things. So you just have to be prudent in how you're reacting.
Sure. A lot of what we saw with SVB was also related to, and I'll ask you this, Treasurer Elliott, about what happened with inflation and the cost of everything, and the lack of the return on the dollar compared to what it was just a year to 2 years ago. The state of Indiana, how much has the state of Indiana's pension fund taken a hit, or has it taken a hit based upon the current market structures, as well as the issue of inflation, which everybody feels at the grocery store, et cetera?
Well, our Indiana pension funds, if we look at well, I'll use the IMPERS pension fund, Indiana Public Retirement System Fund, as an example. We did take a hit. We were down we were at about 47 billion a couple years ago, and then with the pandemic and other issues and inflationary issues, that's really started to take a hit. We were down to about 42 million. But I'll say what's positive is because of wise investing on our state side, we're already back up to 44.9 billion. And so we've had some losses, but we've made those up.
All right, you brought up the issue of investments on the state level. Let's talk about a bill that's currently going through the House right now. It is a bill, I believe it's House Bill 1008, and it's about an anti-ESG, which ESG is environmental, social, and governmental considerations. In essence, basically, people are investing their money on causes, not necessarily investing their money on something that might be considered more quote unquote traditional. So I don't like the smoking company, so I'm not going to invest in Philip Morris. I don't like the oil thing, I'm not going to invest in Exxon, et cetera. Or if I have something I'm in favor of, I can invest in that direction. This bill, in essence, shines a light on some of the people who are doing this. And Mr. Elliott, you are not in favor of some of the approaches that are taking place, and you like this bill that is currently in Indiana that would really limit the ability to make those investments specifically for public pensions. Tell me why.
Yes, absolutely. I appreciate that. And you're right. I've come out very strongly against ESG investing. And really, it's one simple reason. When we look at investing public dollars, we've got to realize that we really can't be making political statements, because Indiana is a diverse state. The people within Indiana have different beliefs, different ideas. And when we think about our public retirees, they come from all walks of life. And if we are starting to make investments based on political decisions without giving them the option of making those choices themselves, then I just fundamentally believe that's wrong. But the other side of that is this. When we're investing public retirement dollars, anything that we can't make up, we have to pay for as a appropriation through the General Assembly. So that comes out of average Hoosiers tax dollars. So really what we need to be focusing on is simply one thing: the fiduciary responsibility. In other words, what gives us the best return on our investment? Now, I don't smoke. I don't personally invest in Philip Morris and things of that nature. But it's not my decision to make that for other people. I need to be focusing simply on the fiduciary aspect, simply on what we're trying to do, which is get a good rate of return. When you have asset managers and others that are forcing those options, then we reduce that rate of return. The studies that have been out have put it, if you're using ESG factors over the last 10 years, you're getting about a 6.2% return on your investment. But if you were doing non-ESG factors, in other words, simply looking at what would give me the best return, you'd get an 8.9. Now, the last 10 years have been relatively good, except for the last couple of years. But the next 10 years may be much more volatile. And I don't think we should be doing that with public funds.
I wanted to ask you as well about, from the flip side of things, there may be some unions, for example, like the teachers union, who might be, I don't want to say more democratically inclined, but they might have causes that might more align with what their traditional political approach is. Is there any avenue for them in this? And secondarily, you're also charged with setting up a list, in essence, of the money managers who do this ESG type of investment. And some have called that a blacklist, almost a do not do business with list, because they might not have your best bottom line in mind. Others would argue that's not the case. Well, how do you answer that?
Well, let me hit them in order first. The first one is, the system isn't designed to, and this is the point of why we need to focus on fiduciary returns only. The system, the public retiree system, isn't designed to allow us to make those types of choices for the basic system. When you look at that, that means you may have a teacher who has one political view, You may have somebody in rural Indiana has a completely different view. But these are all public retirees, so these are people who work for a county, work for a school, work for a local town, so forth. So we really have to focus on what is in the best interest for these beneficiaries, which is return on investment. So that's why we need to be focusing on that. The other can be made in individual retirement plans and individual 401ks, where people can say, here's how I'm going to choose to invest my dollars. But so to answer your second question, the list is created not as a blacklist, but to create transparency, because this has been happening. Since it has been happening, most people have not been made aware of it. A lot of it is being driven by concerns from Europe and other institutions that are saying, hey, we're gonna force these behaviors, and some of these asset managers saying, oh, okay, well, that's make you happy, we'll do that, we'll force those behaviors. So at the end of the day, the list is to create that transparency, and as further evidence of that transparency, creating the list doesn't mean that we will automatically stop using an asset manager. That asset manager may still have the best return on the investment, but at least we'll be aware this is their role, and it opens up for the free markets to say, oh, wait a minute, well, if you're using Acme asset manager because they are giving the best return, but they have an ESG policy, oh, well, we can match that return, and now we don't have an ESG policy.
I wanted to ask you, Ms. Short, about First Source Bank. Does First Source Bank get involved, to your knowledge, do any of the area regional banks get involved in the issue of public financing when it comes to handling investments?
Public. So are we managing like
any
the
of the
Indiana
public
State
pensions
public
or
pensions?
Part of that, yes.
There may be some pensions that different wealth advisory areas and First Source may be managing. That there are pensions that different areas will manage. They may not necessarily at the state level, but there may be more of the regional type pension funds that are being managed.
Is this something that concerns you at all? The bill as it stands currently in the state of Indiana, do you have a level of concern that this might impact your ability to do business?
I don't think so. I mean, this bill specifically, the banks are not impacted by this bill specifically, and so, like, for instance, the Indiana Bankers Association has taken a neutral position. Initially, banks were included, they're no longer included. I think that just happened in the yesterday or something, last 48 hours. So this bill specifically doesn't. I do think that when we look at regulations and we look at how we're making decisions, I think that banks have to be able to look and make their decisions based on risk. And so we've got to look at what are those. We make loan decisions all the time based on risk, and when we're investing others' money, it's always based on what level of risk do they want to accept. And so I think you're looking at those underlying financials, as the treasurer said, looking at those underlying financials and making your decisions based on those risk factors.
Yeah, this is an unfair question, and I don't mean to put you into a corner, but do you see more, and not suggesting that you understand every single individual investor who's coming through your wealth management program, but are you seeing more people, are you hearing about more people, maybe in an ancillary way, who are looking for more of those sorts of ESG type of investments, something that will make them some money, but also send a message about the direction of today's society? There
are some, yes. So more than 5 years ago, most definitely, because we didn't really talk about it. It wasn't as prevalent 5 years ago. So I would say yes, more. Is it a majority? No, but there are some people that are very passionate about those types of issues, and we have people that like the treasurer may not want to invest in the smoking companies or whatever the case may be, and so we do follow that. So I would say there has been an increased focus on that. I think that there's also but now it's more the ESG. You've always had that maybe a little bit with the political or some other type of, maybe religious values that have entered into companies that they're investing with. So today it's ESG, but there's always been something out there.
Sure. Treasurer Elliott, are there any areas in the state of Indiana, as far as the pension funds are concerned, that are off limits? Are there any companies, any places you can invest your money doesn't matter what your politics or your goals are as a company, you'll take the investment, and or the state of Indiana will invest in you?
Well, absolutely. I mean, again, we're focusing on return on investment. We're not when we're talking about public retirements, public employee retirement system. We are not looking. We're trying to actually be apolitical. We're trying to say, look, we're not going to get involved in the politics. We're going to simply focus on what's in the best financial interest of our beneficiaries, of our public employees.
And maybe the better way to phrase that is there anyone who gives you a little queasy feeling in your stomach when you make an investment in a firm or something like that, if you have a feeling that perhaps not everything is on the up and up? And I'll bring it back to something that I know a little bit about, and that's the world of golf. Right now there's this big competition between LIV Golf and the PGA Tour, and there's a feeling that with LIV Golf it's quote unquote dirty money because it comes from the Saudi government, and it's in essence to try to cleanse the Saudi government by running it through the world of sports. And that some people feel as though that's crossing a line. That's crossing a red line when it comes to trying to make cash. Is there anything that the state of Indiana looks at and says, we are not going to cross this line with this particular company or this particular type of industry because we don't like what this company stands for or this industry stands for?
Absolutely, and that is something we can and should do. For instance, during apartheid, as a state, we didn't invest in South Africa, and that's appropriate because that's very public and open, and we're making that determination as a state. Right now, there's a bill Senator Garten from Southern Indiana has pushed forward that will allow us to move away from Chinese companies owned by the Communist Party, and that's important because there's a security risk there, and so. The key thing in my mind, we go back to that purpose of that list, is not to say we can or cannot. It's to say we need to be open, go in there knowing exactly why we're making the decisions that we're making.
So there will be exemptions in this list in all the categories, the E, the S,
Absolutely.
and the G.
Absolutely. So we may find, for instance, we don't go down into the granular level per company. We'll be looking at asset managers. And so you may say, okay, this particular asset manager, maybe they don't particularly like fossil fuels, but they are giving a good return on their investment, and they're better than some of the others, and so that's why we would utilize them. At the same time, competition is a good thing. Oftentimes, what you'll find is if this asset manager has an ESG policy, by us making it known that we are only focusing on the fiduciary, it will have an impact on them to say, we should probably do that too. In fact, that's already happened. Vanguard had a very strong ESG policy. They started to note that it was hurting their return on their investments for their beneficiaries. And so they decided, no, we're not going down that road anymore. And that's really all we're trying to encourage. Focus on the return on the investment, because this is what I've told many people. We're not trying to make rich people richer. This is literally a teacher, a fireman, a person who worked clearing snow in northern Indiana. These are regular folks, and if they have to choose in their retirement years between paying their mortgage and paying for medicine, then we have a problem.
We have a couple minutes left, and I want to wrap up with a question to each of you, and they're going to be very similar but slightly different. Do you feel, Mr. Treasurer, that the state of Indiana's retirement pension funds are in a good shape? And if we run into a bump in the road here over the course of the next 12 months or so, as some people are predicting, that we will continue to be able to guarantee that the people who are currently either paying into the pension system or those who are drawing out of the pension system currently will continue to get those benefits at the same levels?
Your timing on that question is perfect, because I literally just had a meeting this morning with the CIO of Emperors and had that very same conversation. Our state, if we run into a bump in the road, we are in a really good position, much better than most other states. And simply because in Indiana, we've tried to keep things fairly steady so that the beneficiaries and the employers, your schools, your municipal governments, they wasn't volatile. They weren't always paying too much or a lot at this point or a little at that point. We try to keep things at a fairly steady pace, because that way we kept it more more stable for everyone, including the beneficiaries.
Okay.
They would always be receiving what they should.
All right.
And so we are in.
I'm sorry, but I have to cut you off there. I want to get one last word in with Ann Short. We literally have just seconds left, so it's going to have to be short. The overall financial health of our area, how do you feel the economy is? Do you feel like we could take on a bump on the road and come out okay on the other side?
Yeah, the indicators right now are showing good. The risk is what does happen. I think we are overall as a community, and I know at First Source Bank we're strong, we're stable, we've been through it, we've weathered storms before. I have faith in us that we will weather it going forward.
Andrea Short, thank you very much. Mr. Elliott, thank you as well. We appreciate that. That's all the time we have for this episode of Politically Speaking. I'd like to thank our guest, the Indiana State Treasurer, Dan Elliott, and the President and CEO of First Source Bank, Andrea Short. I'm Bob Montgomery, and for all of us here at PBS Michiana WNIT, thanks for watching.
This WNIT local production has been made possible in part by viewers like you. Thank you.